In 2008, Lehman Brothers collapsed. In 2018, ILNFS defaulted on 19,000 crores of rupees of debt and literally shook the entire Indian financial system. In 2023, Silicon Valley Bank collapsed and failed in about 48 hours. Each one of these disasters has one thing in common, that is, risk being ignored, underestimated, or poorly managed. So, this is exactly why the job role I'm going to talk about today is the most important yet the most underrated careers in finance. So, hello everyone, I am Ananya Agarwal, an MBA student specializing in finance, and the job role I'm going to talk about today is Financial Risk Manager. So, who is a financial risk manager? He is the person whose job in an organization is to identify, measure, and control the financial risk, acting as the financial immune system of a company or a bank. They ask questions like whether this borrower will default, what's the probability of it, whether the interest rate shift or interest rate rise by 2% influence the portfolio, and what will be the exposure if the rupee depreciates sharply. So, in India, this role is mostly prominent in banks like HDFC, ICICI, SBI, and Kotak, etc., in NBFCs, in insurance companies, in asset management firms, and in the treasury departments of large corporations. Now, let me walk you through what a risk manager actually does. Number one, risk identification, where they scan the organization to find out where the risk is hiding or it is being hidden. For example, credit risk assesses will borrowers repay, then market risk assesses will the price of assets fall, the operational risk assesses will there be any system failure or any happening of fraud. Then comes the liquidity risk, which assesses if there is enough cash in the company. Second, they do is risk measurement. Once you have identified the risk, then you have to quantify them using the tools like VAR, that is value at risk, stress testing, and scenario analysis, which are essentially used, and they answers how bad it could go and how what's the probability of it happening. Third comes the risk reporting. So risk managers report their present findings to the board, the CFO, or the risk committee weekly, monthly, or quarterly. And in the case of regulated entities like banks, they even report to the RBI. So, clarity of communication is essential here. Next comes the policy and framework design. Senior risk managers build the entire risk management framework where they decide to ensure the certain limits are acceptable and what hedging strategies to use and what early warning signals are to be employed. Then comes last, compliance, that is, in India, risk managers work closely with the compliance teams that ensures adherence to the SEBI guidelines and RBI regulations and internal policies. So, what does it take to become a good financial risk manager? So, first thing is analytical mindset. You have to be good with numbers, Excel, and probability statistics. Second comes financial fundamentals. You have to get good understanding of financial instruments like derivatives, equity, loan, and bonds, and you need to know what you're measuring before you actually manage it. So, next comes the regulatory knowledge. That involves understanding of RBI norms, Basel guidelines, and SEBI regulation, which is non-negotiable if you are working in the Indian banking or financial service sector in India. So next comes the communication skills, which may be surprising to many people, but the risk manager have to explain the complexity to the non-tech members like the board members, business heads, or auditors. And if you can't communicate risk clearly, you can't manage it effectively. Next comes the certifications that help. So, FRM certification from GARP is globally recognized and highly valued in India. And combined with the MBA finance degree, it even creates a powerful combination. And also CFA is also a well respected credential in this space. Now let's talk about where this career takes you. So the typical path looks like a risk analyst to senior risk analyst to head of the risk department to finally CRO, that is chief risk officer. Chief Risk Officer or CRO is a C suited role which comes alongside the CEO or CFO, which is mandatory for all the scheduled commercial banks in India as per the RBI guidelines, which tells you how important this function is taken at the highest levels. So, in terms of the compensation, a risk analyst fresher with an MBA can expect up to 8 to 15 lakh CTC, and a risk and a manager with 5 to 7 years of experience typically earns 25 to 50 lakhs. And if we talk about a CRO at a large private bank, that number crosses 1 crore easily. What I personally find exciting about this career is that it is future proof. And as India's financial sector grows, as more Indian invest in markets, as digital lending explodes, the complexity of risk only increases, and organizations will always need people who can make sense of these complexities. So, I hope these videos could form a real picture of what finance careers look like beyond the classrooms. Thank you.